Hey, what's up, my friends? So welcome back to this week's market analysis. For those of you who are new, to what I do, right? Basically, I'm a trend follower. I trade primarily the trends. So usually, every week on these weekly market analysis videos that you're watching right now, what I do is I identify, trend trading opportunities in the market, typically on the daily charts and on the 4-hour charts. So these are usually my entry time frame. I look for trading opportunities on this time frame, and I share it with you guys. So for those of you who finds that trend trading, hey Rainer, yes, it makes sense. Feel free, to ask me any questions, alright, or feel free, to continue watching these videos because this is what I do primarily. And there will be point, in time where traders who feel that trend trading is not for them, then that is fine as well. But if you are a trader who wants to trade with the trend, then I would say this week's, or I would say my weekly market analysis videos would be useful for you. So this week, alright, I look to cover a few trading setups, alright, the Aussie dollar, we look to cover the crude oil, we look to talk about the dollar yen, which I got stopped out of, and as well as, talk a little bit about those reversal candlestick patterns, because I think these patterns actually do warrant some attention. So just to share with you on how I actually trade them using the trend. So all this and more in this week's market analysis. I'll see you there. Okay, this is the monthly chart of Aussie dollar. So if you're with me last week, you'll recall that I say Aussie dollar was a pair to look out for. So you can see this is the monthly chart of Aussie dollar. I would say longer term, alright, you can expect price to be trading towards the downside. We see lower highs, alright, lower highs over here, lower highs, and lower highs. So you have lower lows as well, here, and here. So it's no doubt that, on the monthly chart, you look at it, you see that price is actually in a downtrend. So on the weekly chart, alright, it's even more obvious down here. And where I mentioned was last week was on the daily chart. I said that there was this head and shoulders pattern over here, and the location of this head and shoulders pattern is actually, I would say, not how a typical head and shoulder pattern should form, right? Because a typical head and shoulders pattern usually forms when you have a current uptrend, then you have a head and shoulders pattern, and then poof, the reversal. But for in this scenario, it is more of a continuation pattern. Because you see lower highs and lower lows, then you get a head and shoulders pattern. And to me, this is usually what I would say, this kind of head and shoulders pattern to me is more of a continuation pattern. So we saw that last week, this head and shoulders pattern, then we have this neckline over here, and last week we had price then traded lower, and we see a downside. So for those of you who are not in this trade right now, right, for example, I'm not in this Aussie dollar trade, a potential trading setup that could unfold is this, because right now I see a potential flag pattern over here. So if price does trade lower, right, we can see perhaps another move lower. So this is a valid setup. For me, right? For me personally, I do like to trade flag patterns. This is a bearish flag. And if that happens in the coming weeks, I'll be looking to short the Aussie dollar. So this is just some trading idea for you, right? Please do your own homework, do your own study, right? Do not take my trading calls blindly, because I am not responsible for any profits or losses you have, right? This is entirely on you, so do take 100% responsibility for your trades. And as always, manage risk, alright? Risk a fraction of your trading capital, so you don't blow up your account over one trade. So up next, alright, let's talk about the dollar yen. I think dollar yen, a trade that I've been in for quite a while. So I think I've been following up with you boys and girls for quite a while. I said that I got long based on this buy stop order above this swing high, so I basically got triggered over here. Price went in my favor, then it whipsaw all the way down, and finally it took me out on this candle. This red bearish candle is where I got stopped out. My stop loss was just below this swing low over here. So as you can see here, I got stopped out. I'm currently out of dollar yen, a loss of 1 hour on this trade. And the next question that I have for myself is, okay, so I got stopped out, nothing to feel sorry for, right? This is part and parcel of trading. Now the next key question is, where will I look to... before I even answer that question, I have to ask myself, is the trend still up? So clearly, if you look at the weekly chart, the trend is still clearly very much intact. You see that, the 20 and 50 period moving average is acting as a dynamic support. The trend is still up, right? You have higher highs here, here, and here. You have higher lows here, and here. So to me, the trend is clearly still towards the upside. Now the next question is, how would I look to get on board this trend? So for me right now, I have no trading setups for me to get back long on this trend, but I'll be keeping a close watch on it, right? Especially if price does take out this swing high over here, right? There could be potential trading opportunities for me to trade. So with that in mind, I will still have a long bias on dollar yen, but I do not have any trigger, right? Do not have any trigger or trading setup to get on board the trend. So up next, how about let's have a look at, I would say, crude oil. Crude oil seems, interesting. All right, we have this weekly chart of the WTI is crude oil, and as you can see here, we have this slump, this slide down in crude oil. Then we have this double bottom. Price traded higher after which, right, taking out this swing high over here. Then it consolidated. You see that over here is where volatility has shrank. And I think last week we had this break and close below this range over here. So we had a little bit of follow through this week. And let's see how we can actually look to trade crude oil. So on the daily chart, again, a consideration for you is this. Since we have this range over here, price is broke out of the range, there's a potential bearish flag pattern. There's a possibility that price could break out lower and look to retest these lows over here. So this is another potential scenario for crude oil, and something to watch out for. And now how about let's talk a little bit about a little bit of counter trend trading, shall we? A little bit of counter trend trading. You don't see me posting it often, but this is a useful trading, I think a useful tool to have in your trading arsenal to take up counter trend trades, right? But always, manage your risk, right? You want to be risking lower. You don't want to be risking your same amount of risk as a trend trading type of trades. For counter trend, I would say reduce risk, reduce it by half, 1/3 of it. And as another thing to take note of is for profit targets, when you're doing counter trend, right, be more conservative in your profit targets. So let me show you an example. So this is the chart of pound Canadian weekly. You can see it's very clear that the trend is up, right? You have higher highs, higher highs, higher highs, higher highs. Sorry, higher lows, higher lows with higher highs, and higher highs. And you can see the 20 and 50 period moving average has been acting as dynamic support somewhat over the last few months. So what I want to point out to you is this. No doubt the weekly trend is still up, but you look at the daily chart, the 4-hour chart, you can see that price retested this swing high over here, then it is followed by a failure test, right? Basically, some traders call this a bearish pin bar, some call it a failure test, some call it a kangaroo tail. Well, honestly, they all basically mean the same thing. It just shows you that there is rejection of higher prices by the market. So you see a rejection of higher prices over here. And if you want to take this trading setup, right, 2 things to take note of is number 1, reduce your risk, right? If you're risking your usual 1% a trade, for this trade, keep it to 0.5 or 0.3, right? Reduce it by half or 1/3 if need be. Number 2, another thing to take note of is conservative profit targets, right? So what should I write? TP, then I put bracket conservative. Hopefully my handwriting warrants, makes you understand what I'm actually writing, right? So conservative take profit target. So say for example, you went short on this rejection of higher prices, you went short on this bearish reversal pattern. So I would say the most obvious level to look to take profits is at this swing, I would say this support over here, right? So before price will come into this support, I would say a good gauge is to take some profits off the table around here. You can take all if you want to, because after all, you are trading against the trend, and there is a good chance that the trend would just continue. So what could potentially happen is this: price could come down lower, then from there it rallies all the way up and continue its trend. So that would be a pretty likely scenario, right? There is no 100% about it, but I would say it's a more likely scenario. So if you're taking up counter trend trades, remember the 2 things that I've shared with you: reduce risk and have a conservative take profit target. So how about lastly, let's talk about Aussie New Zealand, right? That's the last pair we'll be looking at. So Aussie New Zealand is a trend trading setup. You look at the monthly chart, Aussie New Zealand is in a downtrend. And what I want to highlight to you is on a weekly chart, right? Because on a weekly, you see there's this resistance over here. And again, what happened this week I'll say it's a couple of weeks back, right? You have this rejection of higher prices. So the difference between this Aussie New Zealand trade and the pound Canadian trade is that in this setup, all right, this is a weekly setup, you are trading with the trend. Whereas earlier the pound Canadian trade, you are counter trend trading. So for this setup, since you are trading with the trend, then you can, and then it's fair enough to use your full size or your usual size of trading. So if you usually risk 1% of trade, then this you can risk the full 1% on this trade. You are trading with the trend. Profit target wise, all right, the nearest target, all right, would be over here and over here, right? Depending how you manage your trades, you could choose to let it ride for as long as possible, or you could look to take half profits targets, take half of your profit at here, another half over here, and there's 101 ways to manage your trade. So that is your call, all right? But basically I just want to share with you on how you can actually use these pin bar or reversal patterns in your trading. So that's all I have for you boys and girls this week. Hope you find this week's market analysis useful, because if there's anything, if there is anything, right, feel free to leave comments below and I'll get back to you shortly. With that, I wish you all good luck and good trading. I'll talk to you soon.